Hi, this is Nandis here from Dalrymple Trading. So basically, I just want to share with you guys a little bit of my journey and how I got here to basically running my own business and helping other traders get educated and learn their careers in trading. So my journey goes all the way back to the global financial crisis when that all happened with the collapse of the US banks and the GFC at the time. I was working a full corporate job at the time, figuring out how I can make some passive income. And at that time, I was introduced to what's called CMC Markets here in Australia, at least, and it's a global brand now. And they ran a workshop at that time on CFD futures. And that was my first introduction to trading. Um, so walking away from that, I tried my hand at MT4. I'm sure a lot of us here may have experience with MT4. It's a classical trading platform to execute trades. And I still remember to this day buying various indicators as bolt-ons to MT4 to get trading signals when to buy and to sell. And what I realized over the years is indicators are always lagging. Okay, so the signal always comes after price has always moved. So for me, looking back in hindsight, signals are basically a confirmation signal. And they're helpful, but in terms of where you should enter and exit your trade, they're of little value because you're not really identifying where the buyers and sellers are really sitting to make the move. And from an investment perspective, I had no idea what I was doing. The only investment I had was a superannuation or what they call 401ks in America. And I had no idea how that all worked. Over the years, I've tried many, many different techniques and I've learned from a couple of good gurus online as well. There is value in online learning, and I will say, Price Action course by Naveen Pritiani really helped me in those early days to understand where the buyers and sellers were. I read up on a lot of books in trading, including psychology, WD Gann in terms of time and price. That's very helpful. So, I did a lot of research over the years. I read a lot of books from Amazon, Mark Miravini, all of that. And when it comes to trading, it's so broad. You can trade stocks, you can trade Forex, you can trade indexes, you can trade crypto. There's so many different instruments that allow you to trade. So each of them have their different quirks and features that make them what they are. So when we use the word trading, I think we need to broaden the definition of that to cover so many different products. So for me personally, I started trading off in Forex, US, Euro US dollar. And that's the most fluid and most liquid market out there for Forex. And yeah, it was a learning curve ultimately, like, trying to learn the charts and support and resistance and trend lines and the very basics of charting. So that was, a journey that took many years, and even learning it isn't really enough. You really have to practice it, right? It's not really, you don't really gain the knowledge until you put it into practice. So, over the years, I've, drawn trend lines, support and resistance, Fibonacci, points, all that sort of stuff was incorporated into my trading. And what I found was I was confusing myself. One indicator would give one signal and another indicator would give another signal. So what I then decided to do was to get rid of the indicators and just look at the chart as it is. Let's see what the price is actually telling us. Okay, let's just start a narrative. Let's talk about a story about what's actually moving the markets. After that point, I realized, okay, well, there is some, logical methodology to how the market is moving. Then I started to look at, where the buyers and sellers were, understanding liquidity in the market, right? Because whenever you trade, someone else has to take the opposite to your trade, right? In most cases, it's the market maker. Okay. So as we know, we've heard about market manipulation. That does exist, but at the same time, it's also very clear to understand where those levels are just by looking at the chart, right? Because whoever's providing liquidity for your trade has to drive the price to a certain point before the actual move can happen, right? Now, I know that this is covered in some of ICT concepts. I'm not a huge ICT trader, but I do know of his concepts. And yes, some of them do hold value in terms of liquidity. So, yeah, so I can't, obviously mention about him as a trader. I don't know his work that well enough, but just having a look at his basic material, there is some value in terms of the liquidity aspect. So, but my trading is very unique because I basically bring it down to where the buyers and sellers are. What's the direction of the move? And I'm a trend trader, right? There's obviously traders that trade mean reversion. Mean reversion is where you trade against the current trend. Now, if you're a new trader, that's very dangerous because if you're not really sure how to execute your strategy, mean reversion can really get you stuck. But then there are marvelous mean reversion traders like Jim Simmons, who's one of the wealthiest traders that ever lived. He's passed away now, but he's had an automated strategy that used mean reversion. So there is a place for it, but the execution needs to be done in such a way that you're really managing your risk and so forth. So just going back to the trading journey. So over the years, I tried many courses. Used TradingView more recently, probably from 2016 onwards. Got into TradingView, and that revolutionized the game because we were getting real-time data. Okay, and the cost of getting market data had reduced. You could pretty much trade any instrument you really wanted. So I think TradingView really changed the scene for us traders and investors. So I basically learned how to trade, and I started trading my own money. And predominantly, I was trading WTI crude oil. It's an instrument that I always found made sense to me, and also trading the S&P 500 as well. So as part of my journey, I've decided I would share some of my knowledge with future students, and I do provide that service in the way of 5 one-on-one coaching courses. So I'll go through them with you if you're interested. So the first, by the way, I need to mention that the first thing we'll do is we'll do a discovery call with you before we do anything, right? Because you want to make sure that you're getting mentored and you're getting looked after by a person that's actually traded the markets, that's actually profitable in the markets and has been consistent in the markets. You don't want to be getting advice from someone who basically is, one of these young people running around throwing money everywhere, showing that they've got all this wealth when they haven't really traded the markets and understood for a long period of time how the actual market moves. So with that in mind, I've made up my syllabus into 5 different courses. So the first one is Introduction to Markets and Identifying the Market Trends Accurately. So no matter where you are in your trading or in your investment journey, it's important to find out the actual trend of the market, right? Or even an introduction to get started. Like, are we talking about the S&P? Are we talking about individual stocks? Are we talking about, crypto? What are we talking about? So introduction to markets and also identifying the market trends accurately. So we go into the basics of technical analysis here. Right, so technical analysis is analyzing the market using technical key levels rather than fundamentals, which looks at, economics and how the market's doing in terms of, its economy and its growth and interest rates and so forth. So we're predominantly focusing on technical levels, and I've been a technical trader. Although I do take into account fundamental news that comes out, technicals always, in my view, accurately describe what the price is at any given point in time. So what we do is I actually go through this with you as a slide, and then I actually get you to show me your understanding of what the trend is, and we will basically work together to accurately identify what the trend of the market is. Once we've successfully completed that, we'll move on to the next part of the syllabus, which is understanding market control, which is buyers and sellers. So this is critical, right? This is in trend trading. We need to understand who's in control, right? The market can only be in 3 states. So it can be up, which is the bulls, down, which is the bears, and then it could be just a sideways choppy market, right? That does happen from time to time. So it's very important that we identify what period are we in. Are we in a buyer's regime? Are we in a seller's regime? Or are we in a consolidation regime? I use a regime because that's the actual entity or the whales, the large institutions that push the price in that direction. It's so important we identify who they are because we want to trade with them. If we trade against them, we're in for losses because we're going against the grain of what this large institution wants to, basically, move the price. So we're only small fish, as I call it. So better to be aligned with the bigger players in the market. So we will do that one-on-one. We'll look at the charts. We'll share our screens, and then we'll look at where the buyers and sellers are sitting. As part of that as well, we can also look at the key levels of where the buyers and sellers are sitting, okay, where they want to execute from those levels, and we have to wait till those levels are reached. Okay, so when it comes to trading, we don't just take trades because we feel like it. We look at those levels, we wait for the price to come into those levels, and then we execute according to our trading plan, which is point number 5, which we'll visit. The next thing we'll look at is risk management and trading psychology. Now, with this, there's a lot of talk about trading psychology and trading overall, right? There's so many books that have been written about this topic. So, yes, psychology is very important in trading, but I also think that if your strategy is airtight, meaning that you're executing your trading plan, then the amount of energy or emphasis that you need to put into trading psychology will be a lot less. If you're a full discretionary trader and you're looking at price and you're executing based on what you see, yes, that's all psychology driven. That's based on gut feel. Okay, that's full discretionary. So when it comes to trading psychology, the way I do it is because you've got a trading plan, you still need to execute according to your trading plan, but the only psychology you'll need to use is the element of sticking to your trading plan and not get away with such pitfalls such as revenge trading, or introduce other aspects which don't align to what the price is doing, right? So one of the things that I use is also AI, right? I use AI to better understand fundamental events that could be happening during the week. And with ChatGPT and others that are on the market, it really helps us to get this part of the trading journey right. So yes, it's important, trading psychology, but like I said, if your trading plan is solid, then that will always come off the back of that. Number 4 is matching strategy with lifestyle objectives, right? So here, what we want to understand is, what do you want to achieve with your trading or investing? Are you a long-term trader, or do you wish to be a long-term trader? Or in that case, you'd be an investor, right? If you're a long-term trader, or do you want to be just a short-term trader? Now, it really depends on what your objectives are. Now, some people have kids, they've got a family to look after, or they're working full-time. So for those customers, my recommendation is being a swing trader potentially, right? So you look at the chart once a day or once every 2 days, and that'll help you to stay managing your risk and to still be profitable. Or you might be so busy that you don't really have any time for the markets, in which case you want to be a long-term passive investor. And certainly we can get you into that as well by looking at ETFs and looking at which ETFs to get into. Okay, ETFs are exchange traded funds, and also looking at the fees and charges of each ETF to make it profitable for you. And also paying close attention to when you should be buying. Just because you're buying into an ETF doesn't mean any time is a good time to buy, right? So that's where we go back to the sort of S&P 500, and we look at where are good positions to buy into a leading ETF if we choose to go down that route. So here we cater your objectives to your trading plan very carefully. Lastly, once we've done all of this, we actually customize a one-on-one trading plan for you. Right here, we look at all the elements 1 to 4, and then we put it into an actual documented trading plan. Even when you're making a trade, what we'll do is we're going to do a trading checklist. So the conditions have to be met before you enter into a trade, and then the conditions have to be met when you exit a trade. The trading plan will also take into account risk management, which is huge. And I should have mentioned this in point 3, but it goes back to risk management, right? Understanding when you're wrong in a trade and when to get out. Now, if you were to put 10 trades and you were wrong 6 of those times, but if your risk management is right, you'll still end up profitable. So, being wrong in the markets is part of trading and investing. But if you allow the loss to get bigger and bigger without cutting your losses short, then yes, that will lead to a drastic loss for you. So it's always best to have risk management and develop your trading plan with all those factors above. Now, I'm offering this as to all to newbies and also to advanced traders as well. I'm sure there's always something in here that you can get out for your own learning objectives. I will be publishing my own videos, as you see, market analysis. I hope that you take advantage of those ones as well. So, you can see how I trade, what I look at, and share that journey with me. So if you're interested, book in a free consult. We will have a look at whether your goals align with what I can teach you. And if it is the case, we can work together. But, and sometimes your trading style might be completely different, or or you might not want to work with me, and that's perfectly okay. but you've got nothing to lose, because at the end of the day, this is such a great program. I've already got, a lot of people that have signed up for this program to partake in it, and it's customized for you. And even once we begin the trading process, you can book in an additional time if you need to sense check your own trading and to go through anything that you need to clarify. What you will learn is my trading style. Okay, so if you've got a trading style already, you might need to unlearn a few things. Okay, maybe some bad habits have crept into your trading style, so we'll need to unlearn some of those and then relearn what actually works in the market. Now, the beauty of this is I trade my own money. So I put my money where my mouth is, so to speak. So I'm sharing with you what I know, and but it's always continual improvement. So I will always add to the system as time goes on. So with that, I just wanted to basically introduce Dalrymple Trading to you guys and what we can offer. So yeah, go to www.dalrympletrading.com and book in a session and let me know how I can help you take your trading to the next level. Have a good day.